into deeper understanding. We offer market insights as timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The Opening Playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm. Try to trade without emotion involved in your decisions. Go at your own pace. Don't try to keep up with us or other traders. And ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy-to-understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now, this button is shown in 2 places. And I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues, such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. Every move counts in the game they play. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh. Step by step they break it down. No confusion. wheels spinning around. With every trade, they set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Well, good morning, everyone. Welcome to the opening playbook for Monday, May 18th. We have a very special opening playbook going on today. We have a five-person roundtable being hosted by Miss Emily, who's here with us. So I am going to shut up and pass it on to her because we want to get started in just a minute here. She's going to introduce what we're doing today.
Yeah, thanks so much. I appreciate it. And thank you guys for having me and crashing your party. I appreciate it. For those of you guys who don't know me, I've done a few of these, but there are plenty more in the pipeline. We always cover big topics. My name's Emily Turner, and I'm the host of Unfiltered Finance. Of course, we're live today for an important reason because today is Kevin Warsh's first day as chair of the Federal Reserve. Officially, as of this morning, he was confirmed 54-45 last week. Jerome Powell is out of the chair, but in a break with tradition, he's staying on as a Fed governor through 2028. And that's already been its own story. Boy, you've seen the headlines, not just this week, but it's been a weeks long news affair, that's for sure, as its own story. And we're going to get into all of it. So here's where things stand right now. Is back running the numbers right before this. Rates are on hold at 3.5 to 3.7%, held for three consecutive meetings. CPI came in last Tuesday at 3.8%, the hottest since May of 2023, and above estimates. And terrible news for me every time I go to the grocery store, and you guys, I'm sure, as well. The producer pipeline has been running hot. Energy is up nearly 18% year over year. Thanks a lot. Strait of Hormuz. Gas is $4.51 a gallon nationally this morning. Where I am, it's a little bit higher than that, unfortunately. And Treasury Secretary Bessent said this week that he expects one or two more hot numbers. And then, in his words, not mine, quote, substantial disinflation. So the bond market, though, not buying that. The 10-year Treasury hit a fresh one-year high this week at 4.63%. Futures are now pricing in a rate hike before year end. So what does all of this mean for you guys and how you trade and what the market is going to do? But that's why we have four of the sharpest minds that I know: Lance Ippolito, Chris Pulver, Graham Lindman, and Nate Tucci. All of them are here to break this down for you and how you use this and apply it to your trades, your portfolio, or just the dinner party chat and conversation, because we all know that's important. So we're going to do it the same format as we do every time. We're going to do two rounds of questions where we're going to go through. We're going to start with kind of the bigger picture, and then we're really going to dial it in. And then we're going to get into a lightning round where these guys give you actual trade ideas, the tickers. They're going to tell you why they think this is hot and what you need to do, maybe even how to trade it. So we're going to jump right into it. We are going to start with Lance. All right. So, Lance, the confirmation vote was 54-45, which historically is the most politically divisive Fed chair vote since the central bank was created in 1913. And the quote unquote wash trade has already started moving. Bank stocks rallied on confirmation. The 30-year Treasury is flirting with 5%. But this morning, Warsh walks into a Fed that just held rates for the third straight meeting, a 10-year Treasury at a fresh one-year high, and futures markets are now pricing in a hike before year end, when we had really many of us had thought, oh, there's going to be a cut, and that seems that it's not the case. So a contradictory picture right here out of the gate. So the question for you is that the market's already moving on Warsh before he's really even made a single decision. So is the Warsh trade real? Is this a by the confirmation setup, or is the market getting ahead of itself all on this guy that nobody's really fully figured out yet?
I think first of all, the market is always going to be forward looking. So that's why you saw some of the bank stocks catch a slight bid during the whole when he got the when he got through basically the hearing and everything like that. But I think it's kind of shaded right now because bank stocks are very boring, right? Let's be honest. Bank stocks usually don't move. If you look at XLF, it's down like 5-6% this year. And they're just not sexy, so to speak, right? They pay a high dividend, they're low beta, you're right, low volatility. What's the hot thing in the market right now? Chips, space, AI, the semiconductors, right? So one thing I noticed that was interesting last week, it was one day, only one day, was you had the semis like Micron, AMD, Qualcomm actually take a down day. They were down like 5 to 7% that day, and the banks were up. So the banks caught a bid, even though the market, specifically the NASDAQ, took a real sharp decline. So it goes to show you that rotation. If we do get a pullback in, let's say, the AI trade, the chip names, the bank stocks are going to catch a bid to the upside. So it's kind of like, people say, oh, buy the VIX on the market crash or buy puts on the NASDAQ. If you really want a kind of a low key backdoor trade, you could get long XLF or KRE, which is the regional bank ETF, which in my opinion would be a little bit more sensitive. The regional banks than like the big banks like the JP Morgan, Goldman Sachs and stuff. So that could be kind of a hedge or like a pairs trade. If you do start seeing a rollover in the chip sector, you could get long banks, and you have NVIDIA earnings in a couple days. So it could be kind of a setup right there if you want to do.
Yeah. And so for everybody who might be in the chat, whatever those tickers are you were just talking about, if you could pop them in the chat so that people can take a look at those, because we want to make sure that we're keeping track with everybody who is following along at home. Okay, Kane, so you are up next. There's this historical footnote here that maybe people know, maybe they don't, that might change how you read Powell staying on the board, because there's really only been one other Fed chair who didn't resign after stepping down. That was in 1948. So Truman, like Trump, was pushing hard for lower rates at the time. Like Trump with Powell, Truman attacked, that guy tried to force him out. He stayed, exposed Truman's pressure campaign, ultimately helped bring about 1951 Treasury Fed Accord. And that agreement cemented the Fed's modern independence. Well, Powell is now staying on the board through 2028. So it looks like he's going to be pulling the same move, kind of staying in the room to protect Fed independence on the inside. So, Kane, if Powell is doing that, this isn't really just a history lesson. That's an active dissenting vote on the FOMC table on day one. So how does that internal Fed dynamic kind of change how you read Warsh's first few meetings and what this does to the market, and the political check, if you will, that he can present?
Who's the Kane, by the way?
I'm going to jump in because Kane, we just found out this morning, had a last minute travel and literally did not make it on our roundtable before that. So, but he did actually have that really good write up in our channel before he left about that question, which is basically like he thinks it's, very much the case that Powell wants to stay on and exert as much power as he can to hold the Trump in check as best he can from his new position. So I think he's breaking, the typical trend, not just because he thinks he can help navigate, interest rates in a better way, but because he wants to be the anti-Trump voice and hold as much power as he can there as well. I know, Chris, you've talked about that as well with Kane.
Mm-hmm. Well, one thing I think was interesting is, so we already had our little dispersion trade and pullback in the beginning of the year. What I thought was an interesting fact was that 10 of 13 Fed chairs have been tested with about a 10% drawdown or worse within the first 50 to 70 days of them being in office. So when Warsh does step in, I don't think it's just going to be, it's the Warsh trade. I mean, if semiconductors give back some gains because they've been super hot these last 30 to 45 days, if the MTUM momentum trades give back any gains, if the NASDAQ pulls back at all, I mean, we're due technically for a pullback. So I think there's more to it than just a new Fed chair steps in. If Trump wants to be vocal on Powell still, I mean, he's not the Fed chair anymore. It's going to be Warsh. But certainly the CME futures group has shifted their expectation with saying the Fed in 2027 is maybe looking more towards a hike, along with every other central bank. I mean, Bank of Japan expecting to raise rates. Even the Swiss National Bank might come off at 0% again and go up like 25 basis points. Canada's looking to raise rates. Europe looking to raise rates. Great Britain and UK looking to raise rates, and the US is now like, okay, I guess we're in that camp as well. I could still see it changing. If oil prices fall, I don't think the Fed's going to raise rates. I think it's there like as a protective measure to make sure that they're not going to let things run too hot, see these really sticky inflation numbers printing, and then see that yet again they're making a policy mistake by not raising in the the eyes of inflation where things are running a little hotter and yields are way up too. So I just, if anything, we're probably going to have a lot of volatility these next maybe 30 to 60 days. A lot of good stuff got priced in right away with that, bottom in March and that aggressive run. I mean, we had like the 100th percentile of bullishness in like a 30-day stretch. I think we had 7 weeks in a row that we haven't seen a dip yet. So sometimes those bull stretches can run, 8, 9, 10 weeks before we have a pause or pullback. But we might be heading into the end of this month with a lot more volatility ahead with, wars coming back in, new rounds of inflation data hitting in June. We'll see what the labor market looks like the first week of June. We have a holiday on Monday for Memorial Day. So we'll probably just see some volatility, and that's what trading is. I mean, it's never easy. It's never straightforward. There's never a crystal ball. But expect some volatility. But I still think the path of least resistance is market's going to love the upside, trying to grind higher and just kind of stay the course and make sure you're not overexposed.
Yeah, it's interesting, Chris, because you also have a counterpoint that's worth hearing, talking about how, Warsh is, he doesn't think that Warsh is a political stooge, but he does think that Trump knows that we've got real affordability. And so when it comes to this, like, here's the data backing all of this up this morning. The VIX closed Friday 18.43, up nearly 7% in the session. Traders are already repositioning kind of around this first week. You mentioned it briefly that a lot of this has kind of already been priced in, but how much more movement do you think with today's first day kickoff still happens?
Well, I mean, what's funny is the VIX at 16, 17 is historically pretty elevated, but the VIX at 16, 17 in 2026 is actually considered low volatility. We had a 31 VIX, we had a 35 VIX, we had pokes up to lots of 20s to 30s for several months. Now that it's sub 20, the market's treating this like that's a low VIX, and volatility has been way suppressed. Premiums have been way suppressed in the options market. So I think if we have a healthy run back in the 20s, if the VIX cracks 20 again, we're probably entering into more of an uncertainty phase, and maybe it's for a couple weeks, maybe it's for 30 days or so. But if we just kind of bounce around between, let's say, 16, 18 VIX, it's just par for the course. And like I said, the tickers I'd be following as far as, are we still going to keep making more upside trajectory and is grind higher? If semiconductors still go higher, so that's SMH, SOXX, if they keep going higher, if Nvidia has a blowout earnings on Wednesday and it crushes it to all-time highs again, I'd be careful on that because it's $5.48 trillion. So most likely, I think market makers and I saw this morning that the average move in Nvidia, by the way, is just over 5% in their average earnings print, and the brokers are forecasting about a 7% move. So there's actually more premium kind of priced in, which is kind of a good trade. And I think I know what you're going to do there for closing playbook on Wednesday, something similar to me. So watching Mag 7, watching Nvidia, watching SMH, SOXX, and then MTUM, those are kind of the big ones I'm watching this week to see if we're going to get pullbacks. Those all start showing signs of red. Another one that I thought was an interesting pairs trade this year is SMH over IGV, which is semiconductors over software, because software has been crushed this year. It's called the SaaS-ageddon or whatever they want to say, because nobody's going to touch software with the disruption. They're still down quite a bit. Microsoft being one of those laggards in the Mag 7, but IGV as a whole is still catching a little bit of bit off the bottom. I still don't think that trade is done. I think it's still very disrupted, but SMH over IGV is just off those highs. So a couple ways just to make sure I don't want to get caught, trying to buy into these big pumps in semiconductors when maybe that rotation goes into, to take a page out of Lance's book. Like, I don't mind going more boring. We just had a crazy run for like 30 plus days, 45 days. I wouldn't mind going more boring. An XLF trade's totally fine. Going into something more like in the energy space, going like big energy, like a Chevron, ExxonMobil. It's more boring to me, but it's probably a lot safer than trying to chase semiconductors when they've already ripped 100+%. But that's more my style versus trying to chase and pump these momentum trades.
Yeah, and please, if you haven't already, put those in the chat, because I know people are going to want to
Yep, sure.
to take those and jot those down. And Graham, you're next. We talked about CPI and energy prices and all these things that are, meaningful to people's pockets. But let's kind of bridge that gap to where it comes with traders, right? Where we've seen, the bond market's really not buying this potential substantial disinflation that Besant's talking about. Traders have ruled out rate cuts this year. They're now pricing in potential hikes. Worse lands the middle of the contradiction on day one. So Besant is essentially telling the market to look through the numbers and expect relief as worse is settling in. But does data actually support that? And then how does this, like, truly, why does this macroeconomic picture matter to people who, are buying and selling trades every single day?
Yeah, well, first off, I think this is kind of a good picture of what everyone's afraid of. Right now, this is the 70s mapped over our current. Green is real time for us. Blue is the 70s, 80s stagflation market. I saw a lot of these over the weekend, some fear posts, and we're right back in the 70s and 80s. Look at us picking back up. This is inflation. So people are afraid that, hey, if we cut rates, this is going to happen again, which I actually do think is true. I actually do, like Trump or hate him. I do think it's good that Powell's staying on to help balance him out, because I do think if it was up to Trump, he'd have us at zero tomorrow, which would we would see this spike again and probably some stagflation and a real tough end game after that. But as far as the markets go, yeah, we looked at the bond market last week on opening playbook. We had a mega gap down here, which just goes to everything we're saying. People expecting rate hikes. It's not been good for gold. Gold's been in an ugly. It's actually in a technical bearish correction trend. But I do just think that this is it's par for the course, given the fact that we just went to war with Iran, blocked one of the biggest shipping canals in the world. Energy, we've seen gas prices go up 50%. So of course CPI is going up. Of course inflation numbers are going up. But I think of look at the housing market. We're seeing housing market corrections in multiple major cities. Jacksonville is one of them. I think Jacksonville and Indianapolis ranked as number 1 and 2. Those are two cities that I'm really familiar with. So I don't think true inflation is rising at the rate that it's the fears currently are saying. I just think it's all around energy, and hopefully, if we get a peaceful resolution, energy prices come back down. We see gas at $3 a gallon or lower here in the future, and all of these fears go away. The thing is, you'll see if you look at the bond market to kind of give us an idea of what are they pricing in for rate cuts. Like, it can just happen out of the blue where people's perspectives change. Oh man, we're going to be good. We're going to have rate cuts. Oh, we're going to be good. We're going to have rate cuts. Right back down. So ultimately, I do think we're still in a rate cut cycle. I don't think that we're going to hike rates this year, even though I know prediction models are saying it. But ultimately, at the end of the day, we're just going to trade day in and day out. I think being nimble right now, intraday strategies are really, really good. Those are always going to be viable, especially in unpredictable conditions. We have the 60-minute income trade. Chris, I know you've got a pretty sweet trade with your the Flashpoint, which we'll probably talk about a little bit more. But that's just the way to go right now when there's uncertainty, in my opinion. It's the easiest way to follow a system and stay true versus trying to guess what's going to happen next. Guess if we're going to bomb Iran again over the next weekend or not. That's going to be pretty much impossible. As far as the markets go, this is that data point Chris was hinting at earlier. This is something we review in opening playbook each and every week. I'll just take this off here. This is the average market cycle. This is the Dow Jones since 1916, so quite a bit of years back. What does the S&P, or what does the Dow in this case, typically do when we have a new Fed chair? This dashed line here is exactly where we are today at day 0 or month 0 of a new Fed chairman. We typically run up right into it, which we just ran up pretty good. Typically have about a month of positive market action before a pullback. So I've highlighted that there. Don't be shocked if that happens. Like Chris hinted at a moment ago, the average drawdown in the first 6 months is 14.8%. So right at 15%. Again, this goes back since 1916. So this is just something to be aware of. Also, it is funny how, it's kind of coincidental that we just had chips rally so crazy hard and fast where a 15% pullback in the NASDAQ would probably at this point be a healthy breather. Nothing crazy. Right. It's funny how it all lines up. It's kind of like people always, I look at seasonal charts a lot. People will say, oh, March and April are pretty bearish for the markets. Of course that happened this year. Well, we bombed Iran this year. Well, look at last year. Well, we put out a whole Liberation Day tariffs. It's funny how these things all line up. But right now it is that narrative of chips are a little bit too hot. We could use a pullback. It's probably going to line up with this where we'll say, haha, it happened again, the Fed chair trade. But ultimately, at the end of the day, as far as I'm concerned, I have two pictures for you guys here. We are obviously in an AI boom. I think that we still have a long ways to run before the peak or before the bubble pops. This chart here is updated last week by Bespoke. This shows you the red line is where we are now since the launch of ChatGPT. The blue line is since Netscape back in 1994. So you can see we haven't even barely made a blip on the map yet in this current bull market. With that said, look at this. This is a 20% drawdown here. Actually, a little bit over 20%. I bet you if we could flash back to 1998, if there was internet headlines back then, they would probably all be saying, "This is it. This is the end. The bubble has popped. Time to sell." No, we were pretty early there still. And here's just another view of just how extreme that was. When people say we are at the bubble pop right now, you know, it's about to go down. Look at the difference here. We are nowhere near the level we were at back in the late 90s. Nowhere near. So I'm actually hopeful that we get a little correction. I'm hopeful we get another buying opportunity here, maybe in June, early June, after NVIDIA, after AVGO earnings. We may see a 10, 15% pullback, to which case I am going to load up extra long, high beta, all the same names we like to trade, but I'm really, really bullish on the next year ahead and what's to come with all of this CapEx spending and all these breakthroughs with AI.
It's so funny because it's like I look at that chart and I think, what if you had bought Amazon at the bottom of that dip? Can you imagine?
Be one of the greatest stocks ever.
You wouldn't be here now.
Yeah.
You'd be on your own island.
Yeah.
You'd be somewhere else right now, Emily.
Yeah.
Enjoying your pina colada or
I-
whatever.
you know,
and we'd all be here
farewell to
grinding
you
over
guys, right?
XLF.
Yeah, we'd be talking about you as Fed chairman is what would be happening.
That would be a frightening thought. Very frightening. Oh man. All right. So Nate, you're up. So we've talked about this. There's a video that we've done before where we've talked about shorting the VIX. The VIX hit a 52-week high of 35.3 back on March 9th. Peak of confirmation uncertainty. Nate, you were positioned perfectly on the way back down, and then it compressed all the way back to the high 16s before Friday when it jumped nearly 7%. And we've talked about the VIX a little bit already today, but it's sitting, as of my last check, 18.43 right now, with a potential hike on the table. June's meeting still out. Like, the VIX now back in the high teens. So we have a brand new catalyst brewing, and that's in effect right now. Kind of walk us through your thinking. Is this a setup where you would ever short it again? Or are you like, oh, I don't know what's going to happen, I'm just staying out?
Yeah, well, I mean, Chris took all my VIX talking points already. Thanks a lot, Chris. But yeah, no, I love shorting the VIX. It's one of my favorite trades. And by the way, we do opening playbook every day. And so when I do a VIX trade, I'll just tell you on opening playbook the exact trade that I'm doing, just FYI. Here's my rule of thumb. It's actually pretty simple. If the VIX baseline is 14, 15 like it was all through last summer or the winter before, this 20 line I start shorting. You see it right here. But we have a new normal. The base rate of VIX has elevated. So I would just drag this line right to 22. And now I will short VIX above 22. Now, the way that I do this, I have a little model. Again, I shared on opening playbook, but essentially, if the VIX gets above 22, I will short, put debit spread is the way that I do it. If it goes higher, I will do another one. If it goes higher, I will do another one. And I treat these three trades as one trade. So if I want to risk $5,000, I'll break that into, $1,800 a trade or whatever. And each one I give more time. So actually, when the VIX was up here, I actually had about $100,000 short on the VIX for June 18. And all I needed VIX to do, because it was so high, as you kind of reverse cost average, I needed the VIX to be below 25 by June 18. So by the time it was, sitting at 16, obviously those options were up 99.9% essentially of the value. Now, of course, I closed out the majority of those way too early because I thought, like everyone else, well, what if Trump posts this, or, someone mentions nuke one too many times or whatever else. But the trade idea is really simple. And I often tell people that, to me, the short VIX trade is one of the highest confidence trades you can have, because all you have to do is scroll out and look at this chart, and you can feel pretty confident that it always goes back down if you are able to give it enough time. So, and as a roundabout way to answer your question, Emily, if it gets above 22, yes, I'm shorting it. I'll try to give it some extra time under the circumstances. If it gets above 30, I'm shorting it again. If it gets to 40, I'm shorting it again. So that's my mentality. The VIX has the ability to get compressed quite quickly. Most of the time, it doesn't usually need a massive catalyst like the one that we just had with the market, going up 15% in a couple weeks. Usually just a small kind of flatten out or correction starting back up will do the trick. And so that's kind of what I'm expecting here. Yeah, we'll probably see some volatility. We'll probably get some more opportunities to short the VIX, but I don't see it being elevated for an extended period of time. A lot to do with what Graham said. I think the potential of the bulls here is still significant. And I also think it's worth noting that really in the last 3 weeks, the stock market hasn't really gone up as a whole. It is up dramatically because the tech sector is dragging it by its bootstraps higher, but the rest of the market hasn't actually gone up. So I think there's still a lot of firepower left in your retail and your real estate and your basic materials and your utilities and your industrials that they haven't really participated a whole lot yet. And so for me, if the tech sector drops 15% and gives us a buyback opportunity, okay, the overall market will probably drop 3 or 4%. The VIX will be up at 23 or 24. And then even if the tech sector doesn't rally immediately back to all-time highs, I think you'll still see utilities and industrials and energy make a move and hold the serve, where VIX will just compress right back down and we'll have some easy trades here shorting the VIX. So yes, shorting the VIX, 22 is the level. If you ever want those trades, I'll do them on Opening Playbook and show you my exact numbers.
It's funny you say that. In the chat, Jess Global was talking about like the high rates effect when it comes to home improvement, like Home Depots, Lowe's, banks, mortgage departments, etc. That's almost exactly what you were just talking about.
Yeah, I still think we've really underplayed the pick and shovel aspects of the boom that we're in right now. I'm actually shocked at how underwhelming basic materials, utilities, and industrials have contributed so far. If you remember, I guess this would have been 18 months to 2 years ago. Someone can time check me on that. When we first got, okay, AI is here, or it's becoming more active, nuclear and several other things absolutely took off as like a forward-looking play on what we'd expect. And now they've just kind of been like lagging massively behind, as if that story has changed. I don't think that story has changed at all. We need tons of basic materials. We need tons of energy to further. And if it looks anything like Graham's chart that we saw, which the craziest thing about that chart, of course, is that if you start to draw the comparisons, AI has a lot more potential and a lot more direct revenue potential than anything that we saw in the 2000s. And so if anything like that chart occurs over the next year, you better believe the picks and shovels are going to be flying along with it. So
Yep.
Lots of potential there as far as I'm concerned.
Yeah, well, and that's the question. Maybe is that the buy if you're going to do, because we've talked about the time domain, right? That they, like Chris was talking about it, Graham was talking about it being shorter. If you're going to do something long term, is it the picks and shovels?
Yeah, for me it has been. I actually, by the way, I'm including financials in my picks and shovels. I'm kind of including everything, but I think financials have lagged behind dramatically. They typically participate in all-time highs. You go back and look at every time the SPY's made an all-time high. You almost never see financials not be part of those all-time highs, and the spending and the loans are going to be dramatic if this thing continues. The amount of money that's going to have to be thrown out at these different developments is going to be substantial. So I actually include financials as part of that contributing picture of what's going to drive the next year, 2 years, 3 years, whatever it is. But specifically, I think nuclear, I think basic materials, and I think utilities in general. The grid itself is going to be leveraged to the max. People don't maybe always realize this. The grid is almost always leveraged to the max. There's like these, reports that come out like, oh, the grid could never handle what we want to do. Well, yeah, that was true 10 years ago, and 10 years before that, and 10 years before that, they expand the grid so that it can handle it. So that's kind of always been the case. And I think the supply and demand will hit a tipping point. Should be good for utilities.
Well,
Yeah, no.
too, that's why space is so important, because
Right.
I feel like every day I get a new thing about a company with a data center and the town revolting against it. So the reason why there's so much demand for, space and the data centers and everything like that is, no regulation. It's a free for all out there. So that's another race to space, so to speak.
Yep.
Yeah, and we did a video on it on the Unfiltered Finance channel for anybody who wants to look. There's some physics things they've got to figure out, because you've got to put something larger than the International Space Station out there for a data center to go, which is the most expensive thing humanity's ever built. But the demand is there, then they'll find a way, right?
And
So Lance, when it comes to, go ahead, what were you gonna say?
endless amount of money too we have right now with El Presidente.
Yeah.
Open
Well,
check, blank checks.
Blank checks.
Yep.
somebody was just in the chat a second ago saying something that, what is it? Trump greenlighted the big hyperscalers, Amazon, Google, Apple, Meta, Microsoft, Elon, et cetera, to build their own energy and data centers. I mean, they're right. It's this,
Yeah.
there's the need, and it's going to have to be filled some way or another, because the demand's not going anywhere.
And yet XLF is down with all that. That's what throws me off. That financials, even though they're supplying and backing. Now, granted, there are a couple companies who have cash themselves, but that's few and far between. Most of them are doing major spending, major loans, and they've been borrowing at these higher interest rates. So I don't really understand. And financial earnings, there were a couple hit or miss, a couple forward looking that weren't super impressive, but generally speaking, the earnings numbers were very, very good, and yet they got none of the love on the upswing.
I think it's because a little bit more fear of the consumer out there, and obviously everything going on in private credit has been just one big question mark.
Right.
So once that clears and there's no more headwinds, obviously if it does, then I think you see a rotation into financials. It plays the catch-up trade.
It's
They're doing-
almost like you guys were reading the notes I sent you ahead of time, because you've gotten me exactly to the question I'm going to ask next.
We know Lance didn't read the notes ahead of
I
time,
didn't,
so
and I didn't
that's actually
respond.
your
I
luck.
just show up.
Because I directly messaged them on his DM this morning. I was
Yes,
like,
you
this is
did.
how I know.
Right before.
I know. Okay, so you were just talking about this, and you brought it up at the last questions where how last week, financials did move on the confirmation. So and yes, they're back down and it's going all over the place, but his balance sheet plans could actually tighten some of the conditions that hit those same names. So what side of a trade do you want to be on when it comes to that? And then which sector is your highest conviction right now? Highest conviction play?
Oh gosh, that's a hard one, because you just had Permeable Graham show a chart of tech stocks that look like they could coil up and double.
Well, Permeable Graham does say that we should have a 15% pullback.
Right. And I don't agree with Permeable Tom Lee Graham on that. I mean, if we had a 15% pullback, you would have pigs flying, cows drinking Kool-Aid. Like, it ain't gonna happen. If it does, I'll go vegan for a year. Okay.
Okay, we'll shake on that.
Pullback in the
We'll shake on that.
Are we talking 15% XLK or S&P?
No, I'm
Q-
saying like
Q.
NASDAQ 15.
Yeah, Qs.
Okay, all right.
It ain't happening. I do think a reversion to the mean is around like 7%. That could happen. But Emily, I'm so bulled up right now. I feel like I'm going to grow my hair, call my name Lance Lee, and go on CNBC next week. But I do think I can't predict the market. I don't have a crystal ball. We might get a slight pullback ahead of the SpaceX IPO, especially Nvidia has bad earnings. So here's the hedge. You want to play Nvidia earnings instead of buying calls and being giddy bullish. I think what you can do is buy XLF calls, right? You could go out to like next week, even weeklies, if you want to roll the dice and be a little bit more sensitive. Buy XLF weekly calls or next week calls. Nvidia drops on earnings. The Nasdaq's going to tank. Banks could catch a bid, right? So that's short-term play. Long-term, and maybe that starts the 7% pullback. Nvidia tech goes down. The market moves lower too. The S&P will go down like maybe 3 to 5% if the Nasdaq falls 7%. But that's if Nvidia earnings are bad. And the reason why
Nvidia earnings bad is more cows fly than anything else you've said. They never. Now they're going to. I think they're going to go down. They're just going to go down on good earnings like they always do.
Yeah, it'll be the after earnings.
Right. That's the thing. I think their CEO Ginseng is not going to let the stock fall 20% or anything like that. So they'll report good numbers. Maybe they overspended something like, or something in the earnings report. It's very difficult to calculate the move in Nvidia of where it's going to go, because like Chris said, it usually doesn't move that much, even though the market makers are implying 7%, which might even go up. as
Right.
we get closer to the earnings. A lot of volatility, right? So if you don't want to be involved in the volatility, just pass or get long bank calls. XLF is the easiest penny wide options, cheap for a good ROI. But long term, and long term for me is like a month out. So 30 days out, right? So let's say June expiration. Long term, I still think, and I sound like a broken record, the SpaceX IPO is going to be just massive. And we saw that with CBRS IPO'd and the stock basically doubled. So I think still, and I know it's up a lot today, you play NASA. NASA is the ETF. It's NASA. That's it. It has about a 15% SpaceX holding, and I think it rallies on the SpaceX IPO, and that's the setup. Plain Jane out there. That's all you need. You hold it. There's no options on it. You play the SpaceX IPO. Within, I think it's 14 days, SpaceX gets in the QQQ, and maybe that triggers the chart Graham showed us, where you start having that parabolic move, and then you have OpenAI, you have Anthropic IPO, and the market becomes the Wild West, and you could see craziness to the upside.
And you're saying to only do that for 30 days, or you're saying to do that long term?
The biggest move is going to happen on the IPO. So that should be, rumors have it, like June 12th. And then inclusion to the NASDAQ is 14 days. So really you have like mid to late June, you could see the biggest move happen.
And did they figure out the options, Lance? It's supposed to be like 3 days after listing, they get the options on the CBOE?
If that's true, that's insane. Usually
Yeah.
it takes around 30 days for the
Yeah,
option.
I heard a rumor there, but I'm not sure if that was confirmed.
So I just I cannot describe how big of an IPO this is going to be, especially to the retail people who are going to get into the market. You're going to have people who never even bought a stock before start buying stocks with SpaceX. So my only fear in that, in the meantime, between now and then, is the market always goes where there's max pain, and we could have a slight drawdown. We could have a slight pullback ahead of that event. That's the only fear I have. Everything else I agree with Graham, who's very bullish, Nathan as well, and Chris on the pullback side. But it's hard to ignore the fundamentals. Not technically, like the market's not the economy, and I do get that, and everything's gone up in price and inflation. I do get all that. But you have, with the administration, new Fed chairman, their goal is one thing and one thing only: to pump the US stock market.
Yep. You got to grow your way out of it.
Yeah. So I try to break it down into simple elementary, because I ain't the sharpest knife in the drawer. Just the best.
We do not agree with that. We know you are a sharp knife. No.
From
So, and Chris,
fundamentals, we'll say.
Chris, you were agreeing with Lance there. It's interesting because Warsh wants to end forward guidance, and the Fed's practice of telegraphing its next move in advance. That's kind of a massive structural change for the options market. So right now, traders can position months ahead of a Fed decision because they kind of roughly know what's coming, which really this year has been not that way. But under Warsh, that visibility then disappears. And with 10 years hitting fresh highs, the VIX jump, whatever, everything we've seen, ending forward guidance is essentially a structural volatility event for the options market, not a one-time spike, but a permanent change in how that gets priced in. Is this a headwind for traders, or is this actually a really big opportunity that you've seen, or that you would see for people who kind of know how to play intraday volatility?
Well, intraday volatility has just been growing in popularity. It's exponentially more popular than it was when it was first. I mean, we've had 0-day options since 1981 with indexes, but it was like when you trade the expiration day, that's considered 0-day. But now we do that, like everyone talks about 0 DTE. It's now 60+% of all option volume is 0 DTE. The intraday volatility is a great thing for us. Every single day there's an opportunity. I mean, it's all about risk management. When you mentioned the worst stuff, I mean, it's not like Warsh comes in and just dominates everything. Is like, I'm the Fed chair, I do what we say. It's like, it's still an academic council of 12 members, and there's still going to be that background Powell presence as well. And I think that, I do think that Powell has kind of changed the legacy of the Fed into, like, now more than ever, I think Fed independence is very important. So, I mean, really the Fed is kind of backed into a corner because with the high degree of fiscal spending that we're doing, the Fed really is not nearly as powerful as it once was. I mean, the Fed is looked at as the backstop, but right now Trump is your first backstop. Trump's tweeting is the first backstop to the market. This is how we get pumped this entire year and how we did it last year too. So anyway, Warsh comes in, and what the markets are pricing out is the higher potential of a hike versus the higher potential of a cut. But I think as far as, getting rid of forward guidance, I mean, okay, fine. But we also saw news not that long ago where we're going to stop seeing quarterly earnings prints. I mean, whether that happens or not, it's like there's all sorts of stuff that's getting thrown out there. I don't really buy into it yet. But I'd actually like to see the Fed not have to be as transparent as it has been, simply because the market likes this hurry up and wait. And it's almost like if there's not really a lot going on catalyst wise, which I mean, with Trump in power, there's a lot of catalysts and there's a lot of news and noise. But if it's all about the Fed, it's very boring to just sit and wait and everything gets pumped on like a Fed FOMC meeting or a Jackson Hole when they speak. And that's once a month or a couple times a year. But I don't know what to expect from Warsh outside of what we just talked about, which was the market's pumping up leading into a new Fed chair. And we're probably going to have some volatility as the market may test him. But I don't think that Warsh's first instinct is to do something crazy and just all of a sudden bump monetary policy because the market, pulls back 5 to 10%. Talking about some levels on the NASDAQ, I mean, I could see a 6 to 11% pullback in the NASDAQ. And that's really your version trade. I think it'd be very difficult to get to 15 to 20% pullback. So, maybe testing that 10% level puts it in the statistics where now it's 11 of 14 Fed chairs have been tested in the markets. But again, you're hearing us all talking about like the bulled up market. I think that nobody knows how long this thing can go and how high this thing can go. At some point when there's maybe the spending dries up, at some point when there's bottlenecks and we can't get all this demand put into the ecosystem where it's like everybody wants AI and everybody's building for it, but the bottlenecks and we just have to keep building infrastructure. I think that it's been admitted that we're way behind China from the grid perspective, and it's just the crazy part is it is a blank check and everyone is incentivized to build and grow, and you can write off all this depreciation right up front. And it's just, I mean, it's boosting corporate profits. And the one thing I would never want to short right now, in addition to all this optimism, is you don't want to short really good earnings. And the profit margins are growing. These earnings I mean, in fact, I saw way more earnings this quarter, way above the expected move than I have in a long time. We had some blowout earnings this quarter, which again, it just feeds into, man, this market like can't get enough of it right now.
Chris, one thing you were talking about there, I think the worst thing we didn't actually spend a whole lot of time on, but I think is worth at least noting, is that there is an irony here that if you believe what he says and kind of his track record, he is almost the opposite policy of Trump.
Yeah.
Which is very interesting. So like, I'm sure it'll shock everyone that, the Christian guy with 7 kids who doesn't curse leans conservative on most of these like policy questions. Everyone's blown away by that. But Trump has been one of the least conservative fiscal presidents we've ever had. Like historically, in 2020, he did more, dispersions of cash, more distributions of cash out than any president in history. Fed policy wise, he wants to cut, regardless, and get more money pumped in the system. And Warsh is actually like your traditional conservative, let the economy fend for itself, kind of guy. So I think the reason that's worth noting is if we do get into correction territory, we probably will actually, or if you believe what he said in the past, Warsh, we'll probably actually have less of an interventionist Fed than we've had previous to now. And so
that's why I think Trump is the first line of defense.
I also think we've expanded the upside and the downside with this move. So I just, to me, that's worth noting if you're kind of planning your trading and how you want to go about which I love options, because then you can do risk defined trades and you don't have to just have everything at risk.
And two, you'll be having massive intraday moves. So meaning like me and Chris spoke about this yesterday, specifically in the SPX options, or SPX, XXP, SPY options, which are way more efficient than like, let's say the QQQ or IWM. You're going to have some amazing opportunities once that happens, especially with the new open up for retail traders that should be hitting, in a couple of weeks.
It's funny. We were last or a couple weeks ago in opening playbook. We were saying, "Hey, we had this crazy run up. We'll probably see some consolidation." It happened, and I said, "Look, guys, look, we had our perfect consolidation. Didn't move at all." And Dave Mound jumped in. He said, "But Graham, look how big those wicks are." And the moves each day were just as
Massive.
big, if not bigger, than the run up moves.
Yep.
Even though we didn't go anywhere. So intraday, yeah, there's going to be directional.
You're having
plays
like
there.
50-point swings in the S&P
Right.
right. Like that's insane with the VIX so low. Oof. Wait
I
till
mean,
the
we've already the
22
market. It's
is fine.
10:45. Haven't we already seen like 0.3% down and 0.3% up today on the S&P?
Yeah, intraday.
Yeah.
Right.
Yeah.
That's why the S&P intraday trading it's going to get really, really good. And I know the VIX is low right now and stuff, but once it starts really, really moving again, wow, you're going to have amazing opportunities.
Yeah. All right. Well, so we're going to bring it right back over to the Fed chair, and then we're going to get into, after we hit Graham, we're going to hit Nate, and then we're going to do our lightning round. So thanks for sticking with us through all of this. So Graham, 10-year is at 4.63, fresh 1-year high. Yield curve is moving with Powell staying on the board. Warsh's first real decision 4 weeks away. What are you watching in the treasuries and the yield curve right now as kind of the earliest signal of which direction this Fed moves?
Yeah, I'll just check TLT. I'm not really too concerned. Overall, like we said, the moves are happening intraday. Whether we're going to have a rate hike 6 months from now doesn't really concern me because I'm worried what's going to happen 6 minutes from now. So for me, I'll keep an eye on that. I also keep an eye on gold. I believe gold's still in the super cycle. It's in this rate cut super cycle, and like I showed you guys earlier, it's been in a correction with this the tune changing around interest rate cuts. So if gold starts to break out again, I do believe that that's going to be a sign that the market's predicting rate cuts. We used to be able to look at like the small caps, but those have been running too with the market so that you can't really see it from there. But again, all in all, you could sit up all day and night and wonder what they're going to do 6 months from now, and you're going to miss out on everything happening in the present. So, highly recommend trading day to day, intraday, finding hot opportunity. Lance, I like that NASA play. I'm going to buy some of that. So,
Don't top it now. Don't top
oh, I'm going. I'll send you a screenshot. I'll buy it, and then you'll send your
it.
members buy puts.
No, they actually, I spoke incorrectly earlier. NASA just got options listed.
Oh, cool.
They're
Nice.
monthly options, so they have, they're monthly options, and you'll start seeing more volume pick up in it as they continue to trade. But it looks like right now it's a little bit over a 10% implied move for the next 30 days.
Yeah, I'm sure they're crazy
Thank you.
expensive.
Yeah.
And Lance, by the way, some folks were asking about that in the chat. If you can pop that in there. And someone else was asking about SATs for SpaceX IPO also.
Okay. I think I'm posting in the chat under Lance LA. Trying to respond to the chat right now. Look at Graham, what that play is? You know who pumped that is
Yeah.
Now Services is Nvidia CEO.
Oh, and the
Yep.
Don.
And Trump, yeah.
Yeah. I actually do think if there is an opportunity, it may be in software. We've seen Now's fundamentals all go up. Obviously, their CEO is very bullish on it. What CEO wouldn't be? But we talk about Max, like you look at Nvidia, Max Payne isn't to the upside. It just had a great run. Same with the QQQ. Great run. Max Payne is going to be a knife
Right,
fall
pull
from
back.
here versus ServiceNow, probably heavily shorted by now. I'm having a hard time not using that word. But we're seeing a short squeeze. We're seeing the Don put out his portfolio where he owns a whole bunch of it. I'm sure he's going to make sure to drop this one in his speeches like he did with Dell.
Oh
I think that was
God,
last
yeah.
week. Told everyone go buy Dell, and then has 3 days later comes and announces, "Oh yeah, I bought it 60 days ago." I would not be surprised if ServiceNow is next on the docket again with Max Payne to the upside. So that's a name I like right now. Speculatively, don't know if it's going to work 10 years from today, but maybe for a
Right.
short-term relief.
Yeah.
That's
Okay, so we've got one last question for Nate, and then we will get into the lightning round, which is what I know you guys are all excited about, although you've got quite a few tickers and some good points that the guys have given you today. So Nate, when it comes to everything that everybody's talking about, we talk a lot about headlines and how they can really drive the market, but how much attention do you really pay for them or pay attention to them, because by the time it's out, something's already moved.
Yeah.
So what do you feel like people need to know when it comes to rewriting the inflation playbook, whether it's their paycheck isn't keeping up with prices. I mean, all the things that are happening right now. What do people really need to do differently with their portfolio? Whether they're, let's maybe break it into two, like from a longer term perspective versus a more short term perspective based on what's happening now.
Well, you set up the question perfectly because that's my answer. Either go completely long term or go short term, and don't try to kind of guess the middle range. Would be my best advice. I think if you're trying to predict 2 months out and 3 months out, and this is going to be the level. Now, I'm not talking about like Graham and Chris saying like, okay, if we get a pullback, then I'll buy. Like, of course, that's viable. I'm talking about like predicting, okay, the top's going to be in here, the bottom's going to be in here. I'm going to take money in, money out at these different times. I think that's a really challenging game under the conditions we have right now. We have a very unique mix of conditions: record earnings, massive bullish market, tons of uncertainty underneath the surface, a president who's obviously very proactive, a Fed that's unknown, all of these different things. So in my opinion, the best opportunity right now is exactly what the other guy said: very short-term intraday opportunity. The intraday market is so good. It's so juicy right now. There's tons of opportunity because of the way that it's moving and the amount that it's moving. And I still think the long-term horizon is really positive. It's just that in between that I'm least comfortable with. So I would say for portfolio person, I would go very long term. I would kind of set it and forget it and not worry, not try to play the timing game. I think right now is a really challenging kind of swing trading timing environment. But I think the short term and the interest, I mean, this is what Chris and I talked about when he showed me the data that from his initial Flashpoint research. It was like, it's getting better and better and better and better to trade these short-term intraday moves. I think that's for good reason. I don't think that's a coincidence. I don't think that's a fluke. I think it has to do with the core reality of the way that the market is moving. And so to me, it's that kind of take advantage of what's in the short term and kind of how you can manage that, risk define, cheap trades, all that kind of stuff, or just ignore it. Don't try to get in that mindset of I'm going to predict what happens next month, and if Fed rates go up, that means this or that means that. I think that's just really, really hard personally. So that's kind of my advice.
Well, and especially because even if I guess, PDT is changing and that will go into effect in June, but if you don't want to burn a trade, then you're stuck overnight and you're like, wake up and who knows what's happened.
Well,
and
that's
so
that's
inside
exactly the
of the daytime,
thing. I mean, we saw, for example, the gold trade be the most robust, bulletproof trade in the entire market, to a couple overnight sessions being, oh goodness, what have I done if I bought the top of that gold market? Right. So it happened that quickly. And I think that can happen in the Qs, that can happen in XLK, that can happen in space. And so again, risk defined trades where you risk $500 to make $2,000. Great. You lose the $500, you shouldn't lose any sleep. My whole portfolio into that, hoping that the wrong post at the wrong time or the word nuke doesn't get mentioned too many times in a press conference. I think that's a very, very different ballgame.
Yeah, no, exactly. All right, so now let's get into the lightning round. We are going to start with, this is the order we're going to go: Lance, Graham, Nate, and Chris. So they're each going to give you one trade idea that's based specifically on what it is they think is going to happen moving forward, not necessarily with Warsh, because there is some degree of separation there about exactly what they are going to tell you to do or suggest that maybe you do, and then how they're planning on trading it. So why don't we start with Lance? Go ahead.
Oh gosh. So Emily, you want repeat the question again?
Lightning round. Give us a pick that you would
Graham,
trade and
Graham's
why.
still my pick. That
NASA or now?
Yeah, he's going to top ticket now. It's going to go down the next 2 days.
I didn't steal. I said I like that one. I said
I know. So here's what I'm going to do, because I'm a little scared of the NVIDIA earnings, right? And I do think maybe we do get a little pullback. We're selling a little bit today. Of course, NAS is already up, but I've sound like a broken record pumping that thing. So let's do the banks. You could do the XLF. You could do the weekly calls. They're like 34 cents. The weekly 52 calls for this week. Or if you want to be a little bit more conservative, you could go to the following week expiration. So that would be let me just look at the option chain right here, so I tell people correctly. trading on the phone, how cool. You could do the May 29th XLF 52 strike calls for 50 cents. You need the stock to rally about a little over 1.5% to break even. But short term, it's my best play. XLF. We'll just say next week to make it more conservative. And it's my sister's birthday. The May 29th, 52 calls. Keep it simple.
You, by your own choice, picked what you call the least sexy option.
Yes, I
Okay.
know. I know.
Our
Nate,
cows already and pigs already flying.
I want to be able to come next week and say, look, I'm the most boring person here. The trade's up 100%. Meanwhile, Graham goes, Lance, I bought NASA ETF and I'm down 10% on my stock. What do I do? And you know what I'll tell him? Double down, baby.
Okay. All right. Well, you've thrown the gauntlet. Graham, what's yours?
Yeah, I'm gonna go with ServiceNow.
He didn't even do it.
He
Wait,
said he
what?
wasn't taking it. He was just liking it.
I'd never traded NASA before.
Uh,
I like ServiceNow. I like it for
Okay.
a little bit longer play because I do think even if we get a market correction, I mean, the thing's up 6% today with the Qs down 0.5%. I think we're going to see Trump continue to pump the portfolio. So I'm going to go out to, let me just see their next earnings into July. We'll go to the July monthly options here and let's just take a look at what we're working with. Oh, here's a beautiful one. I love
This is
this.
a lot longer than you were talking about earlier.
For an intraday trade?
You said you're doing it for July?
Yeah, July.
Okay.
No, I'm entering it now with July expiration.
Oh, I see.
Yeah. Buy it today if you buy it now if you want to.
Oh, now buy it now. Good,
Buy it
nice
now.
work there.
If the stock gains another 10%, mind you, it's up a little over 6% today. Trade pays nearly 200% in a couple of months. So I'll type this in the chat, but I'm going to be buying the 17th of July 105 call, selling the 17th of July 110 call. This gets you out before earnings. It's trading at 170. Use a limit order, 175. The cheaper you can get in, the better. So I'll try for 175 and see if I get filled now. Oh, filled right now.
Look at that.
Right now, he filled, guys.
So again, the stock just has to get above 110 by July, what was it, 17th? Right before earnings. Pays almost 200% return on investment. If you want to go more speculative, be my guest. Slide those puppies up.
All right. Nate, how about you?
Well, I should say the first trade I'm going to do is
NASA.
put Chris's flashpoint trade on because I think the intraday dips are a gold mine right now. So I'm going to do that one. But then I'm going to go with the best stock in the market right now, which is bar none Google. In my opinion, it's now I will say I think another no-brainer trade is to short Google after Anthropic IPO because Anthropic IPO's numbers are going to be insane. But until then, buy, in my opinion. So Google, best stock in the market. You can go out a week or two, however aggressive you want to be. Of course, you go out 2 days, 4 days, 8 days, because there's expirations as far as the eye can see with the Mag 7 these days. But I'm gonna go out here 14 days. See, wow, no liquidity there. There we go. 11 days. And of course, you guys already know I'm going to do a nice little vertical here with just looking for a couple percent higher. 407.50, 410. See if we can make 150% by the time May is over at about $1.03, I guess 142% or something. For 407.50, 410. 11 days till expiration. Spread is still kind of wide here, but get in for $1.05 or less on Google. And I think, if we get a continued pullback, Google is going to have a hard time going up. But even a sideways market or anything positive in the next week, I think Google is a front runner, and we'll see it continue going up, just like it's up almost 2% today, even with a pretty soft market so far. So I'll put this in for $1 and I'll crawl it up and see if I can get filled on Google. Not going to pay more than 105 on that trade.
Nice. Alrighty, Chris, how about you?
All right. Well, I'm probably gonna have to carry this this trade stuff into Wednesday for closing playbook to get my exact numbers. But what I'm looking at is, let me grab the screen here. So in the discussions today, we mentioned lots of sectors. I like the picks and shovel trade more so than chasing semiconductors. I think that we still have the energy side, we have the material side, industrial side. I like silver quite a bit as well. I posted, I at least talked about it quite a bit in my daily profit plan room, and Project Options Edge got some love on it too. But I'm looking at XLI, and I'm going to do a ratio spread. I want to see what the timing is on this because I'm kind of liking the expiration like July, August, September, like anything. I mean, August, September typically come with like the little, August, like lower liquidity and September effect. But I'd like to take this out and like prior to the November midterms and just see if we're, pumping way higher prior to the midterms or we still get a boost off of midterm lows. Or if we're lows coming into midterms, but doing something where, would I own the actual sector below this? Yes, because I think we're still going to make a higher, higher low, higher high. We might actually start using this support to go higher as well. So XLI, I'm looking for ratio spread down here about 155. XLB, I'm looking for a ratio spread down here around $46 or $45. This is why I'm going to carry this into closing playbook on Wednesday because I want to find out how much further I have to go out. If I go July, August, September, that premium might be okay on a sector. If I did it for like 30 days, it's going to offer nothing that's exciting. So if I can at least get, a couple of dollars per ratio spread, maybe between all these trades, XLI, XLB, XLF, which is down. If I went to, XLF ratio spread below $47 and I went to XLP, which is staples, really one of the lagging performances of the sectors this year. But I think in the affordability crisis, this will probably pick up some. I just feel like the hard part about staples is everybody that is struggling on margins, like your retail stores and grocery stores and things like that. Everything's just getting more expensive. But I do wonder, like ultimately, they're going to try as hard as they possibly can to pass that buck onto the consumer. And if you're buying staples, you're still going to be going to the grocery store and putting food on the table, stuff like that. So XLI, XLB, XLF, XLP. And in now, I'm actually looking at a ratio spread on now to go out towards these. This is November 2022 lows. I'm going to position for this one. The premiums are a little bit richer on now, which is great. And so what I'll do is when I come into closing playbook on Wednesday with Nate and Kane, I will probably have these all lined up. And so I'll share that with, this crowd once come into closing playbook on Wednesday. I'll have those exact details. So it's going to be pretty busy share. But that gives me, 5 opportunities. I'm going to look more into to NASA. I think I can do actually a diagonal spread on that one. It looks pretty good to make it like a $3 debit for like a $7 upside. So I kind of like that potential setup. But I'll play around with those trades. So I don't have the specifics on the expirations I want, but I'll look out to probably July, August, September, find those levels and see what type of balance I can get. But I'm expecting to make on those trades, if I'm doing somewhere between, $1,000 total profit or $2,000 total profit, owning nothing and just doing credits, that would actually be a pretty good play for maybe the next few months.
Yeah. And one of the things that you talk a lot about too is like those are longer time domains, but a lot of trades you're looking at and we've been talking about today are even shorter than that.
Yes, very much so shorter than that. And that is a really good segue into what I'm hoping is going to be a fill today. We'll see. It's dancing around a little bit. We're close to our entry. But one thing about intraday volatility is when we have pattern day trading removed for a lot of brokers in June, the SEC passed its lift from FINRA SEC. It's finally, letting the retail trader have a big win in the trading world. Permissions are getting way better. The margin requirements getting way lower, which is great for the retail trader. And the crazy part is I can just sit and let price come to me every single day. I never have to chase. And so if you can still see my screen, that's what this is. Lance and I can go into more details here, but we did a really great session last night. I think Lance and I were live for almost 2 hours last night. But this is really one of the biggest windows for, the little guy being the retail trader that we've ever seen. And look, Nate and Graham, Lance, myself, we're all retail traders. We've been excited about this for a while. I know that, I have accounts with Tasty Trade and, they've been pushing the CBOE on this for almost 10 years. So it's finally here. And, certain brokers roll it out at different times, but for the most part, June 4th onwards, traders can check with the brokers and see, I don't need $25,000 in a margin account to trade every day. And it's better for, opportunities to trade every day without the fear of, I can't close it today. Like you can trade today, close today, and it shouldn't affect anybody any longer. And also it's all defined risk. And so we can manage risk better. We can manage trades better, have better permissions. And this is a big deal. And so the only way this gets even wilder and crazier is we also start doing like 24 set or 24 5.5 trading. And if they change the option market structure, that's also going to be a really interesting disruptor in the options world. I think we're still going to maintain opening bell, closing bell windows. That hasn't happened yet to like just adjust that into like a 24 5.5 market, but that would be very different for a lot of strategies. Nevertheless, intraday volatility is going to be high. VIX is still elevated. I'm curious if the VIX cracks above 20 or not. But what do we think? We ready to dive in here, Emily? We officially rolled this over? We good?
Yeah, I'm really
Okay.
interested to hear it because I think with all that we've heard today about those shorter time domains, this is actually really the most perfect thing to talk about.
It really is. And so the spirit of Flashpoint Income came with what Lance and I launched a service called Engineered Options in January of this year, right before we had a 10% correction. And that service is still winning 94% of the trades we posted as a group. So we have survived this dispersion trade. We've benefited from this big upside. And whatever we've talked about, we expect there to be a pullback. There's going to be some noise. We're still pro bullish. I think everyone that's trying to be a perma bear is going to be sadly disappointed. And we're not that, like, we're not those traders. We understand there's the bubble can remain, or it's not even a bubble. It's like people throw around the bubble phrase, but it's really overused because we have no idea what an everything bubble looks like at this day and age with AI. Put in perspective, the NASDAQ run that Graham was showing earlier, there was one particular year that in like a 6-month window, the NASDAQ was up almost 100%. That would be insane to see that today. I mean, we've already pumped almost 30% with no pullbacks. But my gosh, it's like, okay, so we have a 10% correction, then another 20, 30% upside. I mean, nobody knows what the upside looks like. And we talked about Max Payne. I still think Max Payne is upside because nobody's expecting it. Like nobody's expecting it to go further and farther and faster and continue to just push relentlessly. And so I still think the upside risk is very real. And Nate had mentioned, yes, the tails have grown on left and right side. So yes, there's risk, but anyway, just stay the course and use defined risk. So this strategy, Flashpoint Income, is about letting price come to us every single day. And just to get into this disclaimer here, profits or performance shown are not typical. Anytime we're taking, strategies and developing tools, we're doing it as the best of our ability. There's no guarantee of the future. We don't have a crystal ball. These trades, I'll be taking all these trades with live capital. The back test results are really promising. We really dove deep into the last 8 years, but we looked into the zero DT trading realm as well. And over 337 trades from March 2018 to March 2026, and we're winning almost 70% of those trades. Average winner, about a 1.5 day hold time for 31.5%. The profit factor is 1.75. The examples we'll talk about today is about $2,500 per trade, but you're going to see consistent winners